Well, hello there, everyone. Happy Friday. I hope everyone is having a good day. Thank you so much for joining me today. For everyone who's going to hop in here live, I'm going to give it just a couple of seconds to let folks drop on because I know some people had said they wanted to be here, and I want to make sure they get a chance to come on. So I'm going to go ahead right now and just make sure that everybody is joining me here. Welcome to everyone who's watching me over on YouTube on my channel. Welcome to everyone who's watching me on my business page. And then especially welcome to those who are watching me from my free Facebook group, the Badass Moneymakers. So welcome, welcome, welcome. I'm excited to have you all here. So let me go ahead and just make sure. I see a bunch of folks watching live. For those watching live, if you can just drop me a comment real fast to let me know that you can hear me okay, that would be great. I'm also going to pull this up too, just so I can make sure everything looks good, especially because we're going to be doing some screen sharing today and some fun stuff. And I also want to make sure that you all can actually see me. Okay, cool. So bear with me 1 second. So hey, everybody, let's just, okay, there we go. Cool. Okay, so I think you guys can see me. I think you can hear me. Welcome. So today I am going to do a bit of an update on the SBA, EIDL, and the PPP. And if you don't know what I'm talking about, don't worry. I'm going to do a very quick overview of what those are in case this is all brand new to you. But there have been some pretty significant changes in the last few weeks. And so I thought it would be very beneficial if we went over what those changes are. Now, these two programs we're going to talk about are loan and or grant options for you as business owners to get money into your business right now as a result of COVID-19. Now, the SBA EIDL, which stands for Economic Injury Disaster Loan, is a program that actually always exists. And it kicks in when there's any kind of a disaster. So that could be, a big flood or a tornado or anything like that. COVID-19 is an example of that. It has to be a disaster that gets certified for your area, and then you are able to apply for this loan. The PPP is the Paycheck Protection Program, and that was brand new for COVID-19. And there's been a lot of legislation and a lot of updates to it because it is a brand new program. So everybody's been figuring it out. So the first thing I want to do is I do have some quick slides here just to kind of make this a little bit simpler. And again, to kind of run through some of those basic details. But the first thing we're going to talk about is the EIDL. And I want to make sure that this works. So I'm going to go to play here. And hopefully, let's just make sure. I want to make sure this shows up correctly because I don't think it does. Yeah, it doesn't. Okay, so 1 second. Bear with me. Bear with me. We're going to go to this screen. Oh, look at that. You can see that. But the question is, can you see that? We're getting funky with technology here today. So I want to make sure that this still works when I go to full screen. It does. Oh my gosh, that's so perfect. And you can still see me, which you don't need to, but that's okay. So the first thing, like I said, we're going to talk about today, let me pull my phone over here, is, oop, that doesn't work, is the EIDL. So oh, that's so funny. I don't know why I set it up to do it to where I had to press, but that's okay. We've got all the bullet points up there. So the EIDL loan, as I said, is the Economic Injury Disaster Loan. And I also feel like, hold on 1 second. Okay, we're still good. And what this basically is it's a loan that you can get up to $150,000. It used to be up to $2 million. They've since capped it. So just note that. And anything in this presentation that is in red is something that has changed. So that is something that did change. It used to be up to $2 million. Now it's $150K. It's a loan for businesses with 500 or fewer employees. And you must have been in business as of January 31st, 2020. There are a few other exceptions to that, but that for the most part is the general rule. It's a low interest loan, so 3.75% interest rate or 2.75% if you're a nonprofit, and you can get an up to 30-year term. So it's actually, it's going to be spread out potentially over a pretty long period of time. Now, the thing I just want to mention about that is, even though that sounds great in theory, remember that the longer it takes you to pay this loan off, the more interest you're going to pay. So, if you're getting a loan for $5,000 or $10,000 or, some sort of not huge amount, you might want to consider paying it off in a shorter time period, even if they offer you a 20 or 30-year loan term, because otherwise you're just dragging it out for a really long time and you're going to be paying much more interest on it. Now, payments are deferred for a year, which is nice. That's to kind of give you a little bit of a a buffer with everything going on, but you are accruing interest. So again, because this is a loan that you have to pay back and there's an interest rate on it, even though you don't have to make a payment for a year, you're going to be accruing interest. So you may want to consider making payments anyway to try to bring that loan down or paying it off sooner if you can. Now, the cool part about this loan is there's no collateral required, meaning you don't have to put up any kind of an asset to guarantee the loan if the loan is $25,000 or less. You do if it's over that. And there's no personal guarantee for under $200,000, meaning if your loan is under $200,000, if your business defaults on the loan doesn't get paid, they're not going to be able to come after your personal car or your personal house or your personal bank account because there's no personal guarantee. That's pretty huge. That's pretty rare, I would say, for a lot of smaller businesses. So that's definitely a big benefit of this. Now, there's also an emergency cash advance. Oops, I went way too far. Okay, cool. There's also an emergency cash advance piece of this. And the emergency cash advance, it's part of the EIDL. So you cannot apply for the emergency cash advance only or just that piece of it. It's part of the EIDL. But what it is it's an up to $10,000 emergency cash advance. And they give you the way they determine that amount is they give you $1,000 for every employee you have. If you are self-employed and you do not have employees, you'll get the $1,000. They kind of count you as an employee, okay? So up to $10,000, but limited by the number of employees you have. Now, this cash advance does not have to be repaid even if your loan is denied. So you go through the whole process for the EIDL, they approve you for the cash advance, which by the way, the approval for the cash advance is pretty simple. Like that's not this whole process, but they approve you for that. And then they take you through the loan process. And if you get rejected for the EIDL at that point, you still get to keep the cash advance that they gave you. You do not have to pay that back. And you also don't have to pay it back if you get the EIDL. So either way, that's a cash advance for you, does not have to be repaid. Now, in theory, the cash advance can be received in as few as 3 days. What they did a very poor job of explaining is that they mean once you kind of get into the program and into the process for the EIDL loan. So I can tell you, I applied pretty much the minute this opened up, and my state was eligible because again, every state has to qualify for this disaster loan. Now, I'm fairly certain that every state at this point has qualified because we're all going through COVID. So that's not an issue, but every state kind of qualified at a different point. And so as soon as my state qualified, I applied, and I think I got the cash advance probably in late April, I would say. I didn't hear anything about the loan, like at all, until I would say mid-May. Okay, so they're not great at communication on this thing. And by the way, the only reason I knew I got the cash advance is because they put $1,000 into my business bank account. They didn't send me an email. They didn't say congratulations. There was no documentation. I just got $1,000 and I was like, oh, that must be that. So just know that that process is not so great, okay? Now, how do you actually apply for this thing? So you go onto the SBA's website, and I've put the link here, covid19relief.sba.gov. You get it directly from the SBA. Unlike the PPP, which you apply for through a separate bank, this comes directly from the SBA. You will need to give them some basic information about your business, your gross revenues, your cost of goods sold. If you are a rental property owner, they'll want to know your lost rents, your cost of operating expenses, other reimbursements you expect to receive. We're going to talk about why that matters. I'm going to go into the actual loan agreement and show you why that matters, and the number of employees. And by the way, the number of employees, that's how they determine that emergency cash advance. Now, you need to make sure all of this information is accurate because you are attesting to this being accurate. So this is not the time to fudge, okay? They also may request your federal tax returns for the owners. They may request a year-end profit and loss statement. If you haven't filed a tax return, they may request a current year-to-date profit and loss statement. I will tell you, as someone who's gone through the entire process and got an approved loan, I did not have to provide any of that. That does not mean you won't have to. So be prepared with that documentation so that the process can go pretty smoothly. Let's talk about the application process. I already mentioned this. Oh, I went way too far. No, we're good. I already mentioned this a little bit, but so a couple of things to note. So you go on the SBA website, you're going to go through the application process. Now, the initial application process is not that long. So it does not take you that long. It's going to ask some of those questions I mentioned, pretty straightforward. Then you wait. And there's not a really good process for you knowing where you are at in the queue or how much longer it's going to be. It just kind of sucks. And I hate to say that, but it really just does. There's not a good communication process there. Now, let's talk about the advance. So you may need to accept your loan before getting the advance. What's going to happen when you do get to the point where you are eligible for the advance and the loan is they're going to send you an email that basically says, we're processing your loan application. Please click here for the next step, something like that. And you're going to basically have to start that. You click on the button, you kind of start that process with them online. So you may have to start that process before they send you the advance. This is not what was happening before. My example is what was happening before, where they would just send people money. But I think what was happening was they were sending people money, and then people, weeks later, people would get the loan documents and they'd be like, oh, I don't want to do this loan at all. And then the government was kind of like, well, we sent you that money that was supposed to be part of this program, but if you're not going to agree to this, it was a big mess. So now you may have to accept the loan before you get the advance. You also, and I said this before, but I do want to clarify, we don't know this for sure. But from everything I've seen so far, you may not be able to get the advance without taking the loan. So before I made it sound like that was absolutely the case. I apologize for that. I'm fairly comfortable saying that, but I don't know that for sure. So here's what I would tell people, because I have had some people say, well, I just want the advance. I don't want the loan. If that's the case, my suggestion, I'm not saying you have to do this, but one idea to work around, if you will, is you could accept the loan. And the cool part about the loan is they'll tell you what you're approved for, but you can lower the amount. So I think it's maybe $1,000 or $2,000 is the lowest loan amount you can take. So you can actually lower the amount if you want, accept that, get your advance. And then once you get the loan funds dispersed to you, you could pay them back. And you may have a couple of days of interest there, that you're paying. So there might be a small amount of money you're paying for that. But if you really want that cash advance, that's one potential option. Again, I'm not a lawyer. I'm not recommending you do that, but that is a workaround that I have heard some people are doing, and so far seems to be working. Because like I said, I do believe that you do need to get the loan in order to get the advance. Okay. Now, you may still be denied for the loan. So even after you've accepted the loan amount, because that's the first screen that happens once they tell you you're kind of in the loan process. First screen you get is, here's the loan we're going to offer you. Here are the terms. Here's the amount. Do you want a different amount? You can always lower that. I would lower that if you don't need the full amount they're giving you. Don't feel like you have to take the full amount. But you're going to accept the loan. That's what's called accepting the loan. You basically accept the loan and say, yes, please move me on through the process. So even after you do that, you could still get denied. And I have heard that's happening to people. But if that happens, you will get to keep the emergency cash advance. You do not need to repay it. Okay. So that's everything about that. Now, I do want to hop into, let's talk about collateral real fast. And if anyone has comments, I am not able to see them right now. So drop your comments or questions into the chat, and I will get to them as soon as I finish this SBA portion, which we're almost done with. We're going to jump into the agreement. So let's talk about collateral. So I mentioned this is required for loans that are $25,000 or higher. Collateral would be inventory. It could be equipment. It could be any financial instruments that you might have, like investments. It could be a letter of credit rights. If you've got a line of credit, kind of assigning the rights to that over. It could be receivable accounts receivable, notes receivable. It could be deposit accounts. So really any kind of asset in the business can be used as collateral. Now, there are some rules around this, and I'm going to show them to you in the agreement, but I want to highlight them here as well. You cannot sell or transfer this collateral, with the exception of normal inventory. That you definitely can. Or accept future advances on this collateral without SBA consent. So let's break that apart for 1 second. So if you put up let's say you've got an investment account in your business. If you put that up as your collateral, you cannot sell or transfer that unless the SBA gives you consent. Similarly, you cannot use that same investment account as collateral for something else, again, unless the SBA gives you consent, okay? And the other thing I want to point out is that when you are in a collateral situation, when you're required to put collateral up, you must provide proof of and maintain hazard insurance, a hazard insurance policy on the collateral. You have to provide proof of this within 12 months of the loan being dispersed, and you must maintain this insurance on your collateral for the lifetime of the loan on at least 80% of the insurable value, I should say. So at least 80% of that value, okay? Now, the other thing I want to talk about is what the EIDL can be used for, because this is another area that is fairly restricted. And this is really important to pay attention to, because when you're thinking about whether or not to take the EIDL, I want you to pay really close attention to this. So the idea behind the EIDL is that you're using it for emergency working capital. This is not meant to expand your business. It's not meant to have your owner's profit. This is meant to get you through, to keep everything stable and afloat, okay? So it can be used for payroll. It can be used to pay your accounts payable. If you've bought inventory and you owe money for that inventory. It can be used to pay fixed debts like your rent or your mortgage. And it can be used to pay any bills that could have been paid had COVID-19 not occurred. Let's talk about what it can't be used for, because I think this is really the one that highlights not so much issues, but some of the things to just sort of be aware of. The first is dividends and bonuses. So it cannot be used to pay dividends or bonuses to the owners. And what I want to highlight here, and again, I'm going to show you this in the agreement, is that it's not just that you can't use the SBA EIDL funds to pay dividends or bonuses. You actually, according to the agreement, the way I read it, you actually cannot pay dividends or bonuses at all with any cash in your business while you've got this loan outstanding. And while that might seem really harsh, if you think about it, the idea behind this loan is to give you emergency working capital. So the SBA's perspective is, look, if you've got the cash to pay bonuses to your owners, then you've got the cash to pay this loan back, right? Or at least pay some of it back. So that's the first one. Similarly, disbursements to owners are not allowed unless for the payment of services. And we're going to talk about that. So if you're a self-employed person or even an owner and you're working in your business, you can obviously compensate yourself for that work. It's not allowed to repay stockholder or principal loans. Again, the idea is the SBA should get paid back first before your owners get paid back. It's not allowed to expand facilities or to acquire fixed assets. I would say as a general rule when we're thinking about this, because I've had a lot of people ask, well, like, does that mean I can't buy anything for my business? No. As a general rule, for tax purposes, we have this kind of $2,000 threshold. Like anything under that, we generally expense. Anything over that, we generally capitalize. I would say that's a pretty good rule of thumb here. So if you're going to go buy an office desk chair, that's probably fine. I wouldn't go buy a brand new truck for the business. It cannot be used to repair or replace physical damages. It cannot be used to relocate without notifying the SBA. Now, in a few minutes, I'm going to show you how you actually do notify the SBA. But note that this is not so that you can open up a new location. It's not so that you can move somewhere else. Again, if you want to do that, let's say because of COVID-19, you have to sell your house, you have to move, so you're going to move the business. You can do that, but you need to notify the SBA if you're going to do that, okay? And you can't use this cash to do that. Lastly, it cannot be used for non-American, well, let me rephrase. They strongly advise against using it for non-American made goods if American made are available. And again, I'll show you where that is in the agreement so you can see the exact language they use. Now, a few more things on this list. So it cannot be used to refinance long-term debt or to pay down or off SBA loans. And the reason is, like, when it first came out, a lot of people were like, well, this seems awesome. These terms are great, 3.75% over 30 years and no payments for the first year. I'm going to refinance all of my debt. No, that's not the purpose. Again, the purpose is to give you emergency cash now to pay your business bills now. It cannot be used to pay a federal debt, even including monthly payments. You cannot use the money for that with the exception of IRS obligations. Now, a big question I've gotten a lot is credit cards. Can I use it to pay credit cards? Candidly, the guidance on this is pretty slim. So I don't have a 100% answer for you. But what I would generally say is, in my opinion, it depends on how long you've had the debt and what the charges were for. If this is debt that you had from a year ago, like pre-COVID, and you're just still working on paying it off, then I'm going to advise against using this money to make those monthly payments or to pay it off. If this is debt, if in the middle of COVID, so let's say it's something you put on your credit card in the middle of COVID, but let's say it's for something that is on this list back here. Where did it go? Nope, that's on this list back here. Like, let's say it's to, to acquire some fixed assets. And you put it on your credit card, even in the middle of COVID. I'm going to say no, because again, they do not want you using the fact that you put it on a credit card to get around the rules about what this money can be used for. Now, I do want to say this. This does not mean, with the exception of disbursements to owners and bonuses and things like that, this does not mean that you cannot expand your facilities right now or while the loan's outstanding. It does not mean that you cannot pay any of your debt while this loan is outstanding. It does not mean that you cannot acquire fixed assets while the loan is outstanding. It means that you cannot use the EIDL funds to do those things. So what I would recommend is making sure whatever you get in EIDL funds, you track it. Like, I would probably get an Excel spreadsheet. I got $10,000 and I would literally track every single thing you use the money for, so that if you are ever audited, if they ever have questions, you can show them exactly what the money is used for. Speaking of which, let's talk about documentation really quickly. So the documentation you need: itemized receipts of what you spent the money on. So not just that Excel spreadsheet, although I think that's helpful, but actual receipts of what you spent the money on. And you must keep these for 3 years from the date of the final disbursement. Now, final disbursement is a big term that might sound kind of confusing. What they really mean is 3 years from the date that you got the money. Sometimes with these EIDL loans, they'll disperse the money to you over time. They're not really doing that right now. They're just kind of giving you all the money right up front. So 3 years from the date they give you the money. You do need to keep current and proper books and records. Those are your accounting records for the most recent 5 years. So for a 5-year period in your business, and you need to keep those until 3 years after the loan is paid in full or it's matured. So if you get that 30-year loan, you have to keep books and records for the last 5 years for at least 3 years after that 30-year period ends. Okay, so keep that in mind. Now, you should be doing that anyway for your business. You should have those records anyway. Lastly, the agreement says you need to provide financial statements to the SBA no later than 3 months after fiscal year end. I will tell you, I have not seen guidance yet on exactly how this is done, if everyone has to, or if you just have to have them available in case they are requested. So more to come on that as we learn, but be prepared to provide financial statements to them at the end of every year, no later than 3 months after fiscal year end. Okay, let me come off the slides here for a second. Again, if you've got any comments or questions, feel free to drop them in the chat. I want to show you, let me pull this out real fast. I want to dive into, and I don't know why my mouse is not working right now, but I want to dive into the actual agreement, if I can get my mouse to work, because I want to show you what this looks like. And let me find it. I had it up. I was so prepared, and now I'm not. Oh, where did it go? You know what? Actually, I know where it is. There it is. Okay, so let me share my screen again. And again, drop your questions or comments in. I'm happy to go over this. So this is my actual agreement. So this is like a full legit agreement. This is exactly what yours will look like, with the exception of the terms in terms of the amount or the number of payments and all of that. So I'm going to skip past the private stuff I don't want you to see. Very, very straightforward agreement in a sense. Like, I actually give them some credit. It's pretty well organized. Okay, there we go. There's my mouse. So first section is going to be your payment section here. And this is basically going to say it's installment payments, meaning you pay them over a set period of time. In my case, $45 a month. Yours may be different. But again, I want you to note this: the balance of principal and interest will be payable 30 years. So this is a 30-year loan. So if I If I just pay what they tell me, $45 a month for 30 years, I'm going to pay a lot of interest. So more than likely, I'll pay this off within the next year to 2 years. But you could, in theory, if your number is 45 or whatever it is, you could, in theory, pay this very low payment amount. Now, notice here it says will begin 12 months from the date of the promissory note. So that's that year grace period you get. So you do not have to make payments for a year, but remember your interest is going to accrue. And that's this part right down here. Interest will accrue at the rate of 3.75% per year, and it'll accrue on funds actually advanced, meaning once they give you the cash, boom, they're going to start charging you interest, and even when you're not making payments. Payment terms, I'm pretty basic stuff, basically telling you how your payments are going to be applied. Here's this collateral section. We already basically went over this, so I'm not going to spend a lot of time on this. But again, for loan amounts of more than $25,000, you are granting collateral. And that'll be described in your agreement. I don't have collateral in mind. My loan was for less than 25K. And here we go. For loan amounts of 25K, SBA is not taking a security interest in collateral. Okay, so that's your collateral section. And this lists out all the different types of collateral, okay, that can be included. Now, here are the requirements relative to collateral. So if you are putting collateral on your loan, this is really important. Borrower will not sell or transfer any collateral, meaning and this is not just for this first year, folks. This is during the life of this loan. Whatever you put up for collateral, you will not sell or transfer except normal inventory. If you put an inventory up, you can definitely sell or transfer that. And then here, borrower will neither seek nor accept future advances, meaning you're not going to use this collateral for something else while it's being used for collateral on this loan. Use of the loan proceeds. This is another important one. So borrower will use all of the proceeds of this loan solely as working capital to alleviate economic injury caused by disaster occurring in the month of January 31st, 2020 and continuing thereafter. And then it talks about some filing fees that you have to pay for loans 25K or higher. So again, working capital. This does not mean you take this money and go on a big vacation. It does not mean you bonus yourself this money. You can pay yourself though. We'll talk about that in a second, but you've got to use it as working capital. Now, here they get into some more details here, okay? So here's the part that you will obtain and itemize receipts. And they talk about the process for that. That's for the 3-year period. You've got to have your receipts. Here's the part about you will not relocate without the written permission of the SBA. Now, I'm going to pop this up on the screen real fast. If you need to reach out to the SBA, this is the email address that you can send them a notification to that you would like to relocate. So, and I just want to say, yeah. So to request SBA's prior written permission to relocate, you'll present to the SBA the reasons the reasons you want to relocate, and a description or address of the relocation site. And so you can send this to the SBA through this email address. And then they'll determine whether this is appropriate for you to use these funds for. And that's solely their decision, by the way. Okay. Now, here's the part about the American-made stuff. So borrower will, to the extent feasible, purchase only American-made equipment and products with the proceeds of this loan. And look, to the extent feasible is kind of one of those wishy-washy terms. I don't know how hard they're going to enforce this, but I'm not sure I'd want to get on the bad side of the SBA. So to the extent that you can, if you're buying stuff with this money, I would buy American-made. This last one probably isn't that relevant to most of you, but this is basically saying if you are going to request more money, if you're going to request a loan increase, you've got to do it as soon as the need is discovered, the need for more money is discovered, and generally within 2 years from the date of the original loan approval. This next section just talks about that you will sign and return the loan documents within 2 months, so they're giving you a time frame on that. Now, this section here, compensation from other sources, is pretty important as well. This section says that you are not receiving compensation for this disaster from other sources. So an example would be an insurance policy. If you've got a business insurance policy that's paying out, you're not receiving funds from that. So proceeds of policies of insurance or other indemnifications, grants or other reimbursements from government agencies or private organizations. You know, Facebook was doing a grant and Google was doing a grant, all that. If you're getting money from those organizations, if you happen to apply for and got one of those grants, you cannot use you need to disclose that with the SBA. And in many cases, that precludes you from being able to get the EIDL. It depends on how much you get and when you get it and all that. But now I did have someone ask me, well, what about unemployment? Benefits. Unemployment is a benefit that you as an individual receive, not your business. This EIDL is a loan that your business receives. So that's different. That unemployment does not count as a compensation from other source because you as an individual are receiving it. Now, let me be clear, and not to dive too deep into the unemployment rules, but if you are using the EIDL funds to pay yourself, then you better be disclosing that when you're applying for unemployment, because most likely that will preclude you from getting unemployment. You cannot be double dipping there. Okay. Anything else? So basically this just says that you'll notify SBA if there are other types of compensation that you're getting. Again, we're not talking about unemployment. Okay, so that's that. Here's this duty to maintain hazard insurance. Remember I mentioned this. This is for loans over $25,000 where you have collateral that within 12 months of this loan being authorized and agreed upon, you will provide proof of a hazard insurance policy of at least 80% of the insured value or insurable value of your collateral. And in like big freaking bold letters, just so you can't miss it, borrower may not be eligible if the insurance is for future assistance, if the insurance is not maintained as stipulated. So like basically the SBA will kick you out of their club forever if you do not do this. So it's super important to do this. This next section talks all about the books and records, your accounting records that we talked about, that you're going to maintain current and proper books, that you're going to have them for at least the last 5 years. And that's a rolling 5 years, okay? So the last 5 years, and you're gonna keep them for at least 3 years beyond the date of maturity, the date that the loan ends, or it's paid off. So if you pay off the loan in 5 years, then you only need to keep it 3 years after that initial 5 years. If you wait till the very end and you pay the loan off over the 30-year term, then you would need to keep your books and records for the last 5 years for those 30 years plus 3 more years. This gives the SBA the right to come in and inspect those books, to audit them, to request, information from your books and records. This is the part where it says, borrower will furnish to SBA not later than 3 months following the expiration of your year end, and in such form as SBA may require borrower's financial statements. I suspect we're going to get more guidance on that, exactly how to do that, exactly what it should look like, is there a form, whatnot. So more to come on that. And then this just really talks about that, that you are authorizing all federal, state, municipal authorities to disclose tax returns and any other records or documentation that you file that that the SBA may want to request. Okay, now let's talk about yes. Okay, so limits on distribution of assets. I don't think I mentioned this before, but this basically says that you will not, unless you get the SBA's consent, you will not distribute any of your assets or give any preferential treatment, make any advance, directly or indirectly, by way of loan, gift, bonus, or otherwise, to any owner or partner or any of its employees, or to any company directly or indirectly controlling or affiliated with or controlled by a borrower or any other company. This is basically, that was like a lot of words to basically say you're not going to give yourself a bonus, you're not going to give yourself a loan, you're not going to give yourself a gift from the company, because that's not, while the loan is outstanding. Because again, if you've got the cash to do that, you should be paying back this loan. The next just requires you to keep an equal opportunity poster hanging in your office. There's a disclosure of lobbying activities. So if the loan is for more than 150 grand, which at this point doesn't really matter anymore because they're not giving them for more than that, but you would have to certify that you're not going to do certain lobbying activities. You're not going to use the money for lobbying. This section I want you to pay very close attention to. This is the borrower certification section. And this is the section that you are certifying to these statements. Now, this first one, there has been no substantial adverse change in your financial condition since the date of the application for this loan. This is kind of a funny one because for most of us, there probably has been, right? Like COVID keeps getting worse and, business-wise, like we're also trying to figure this out. That's not really what they're talking about here though. What they're talking about, and they say it here, Adverse changes include, but are not limited to, judgment liens, tax liens, mechanic liens, bankruptcy, financial reverses, arrest, or conviction of felony. So if the situation is just that business has gotten worse, that's okay. But if you have a bankruptcy that all of a sudden came up, or a tax lien that wasn't there before when you applied but is there now, that's the kind of thing you're going to want to make sure you talk to the SBA about before you sign this loan agreement, just to make sure that they're aware of that. The second representation you're making is that you have not paid any fees to anyone, an attorney, an accountant. Sorry, I have something in my eye. Ignoring that. To like in connection to apply for or to get this loan, okay? Because you shouldn't. This is a loan you should have applied for on your own. And you know, it's pretty straightforward form. And that certainly, so they want you to testify to the fact that you have, or certify to the fact that you have not paid any fees for them. They want you to certify to the fact that all the representations, all the statements you made in this loan application are true. They want you to, this one here talks about, going back to the thing about insurance and other compensation, that no claim or application for any other compensation for disaster losses has been submitted or requested to any other source. And no such other compensation has been received other than with that which you have fully disclosed to SBA. So if you've applied for grants, if you have an insurance policy and you've applied for that, make sure you've disclosed it. Now, you could say to the SBA, like, look, I applied and I got rejected. Okay, but you need to make sure you disclose that. And again, the email address right down here, use that. That's a great way to reach out to them. Neither you nor your business or anyone who owns at least 50% of the business is delinquent more than 60 days for an administrative order, a court order, or a child support agreement. So kind of a random thing, but important to be aware of. And then this one's kind of similar to the other one, but you're certifying that no fees have been paid to any representative, attorney, accountant, whatnot, for services in connection with applying for or closing this loan. And that if you had an agent help you with this, there are some rules around that. But I don't think that's probably going to be applicable to most of you. And then you are certifying to the best of your knowledge that the representations you'll make in the attached certification regarding lobbying are true. I'll go over that very briefly, but it's really not going to apply to most of you. This section just talks about all the bad things that are going to happen if you lie on this application, so please don't lie. You know, again, I mean, they could go after you for fraud if you lie on this. So you definitely want to make sure that you're giving them all of the accurate information. Again, use the email address below. I'll also throw up the phone number real fast. You can use this phone number to call them if you prefer to call them. I like to have everything in writing, so that's why I like to use the email address. But you can call them at 1-800-659-2955. So here's the email address. Let me put that back up. Lastly in this, and again, this is a lot of legal stuff. I'm not a lawyer. I'm not really going to go through this in detail, but definitely read it. It talks about what happens if you violate this loan agreement. And then just some general rules about, or details about the funds being dispersed. And that's the agreement for the most part, a little bit more legal stuff here. This certified lobbying thing, again, this is just for loans over 150 grand. And essentially you are saying that you will not use the funds for lobbying expenses, et cetera, et cetera, et cetera. Probably not applicable to many of you, okay? So let me remove this. So that's the EIDL agreement. For those watching live, I know we have a bunch here watching live. Let me know if you have any questions on that. I'm happy to answer them. I want to jump really quickly into, because I don't want to take up too much more of your time, the payroll or Paycheck Protection Program. So let me jump into that super fast. So we can I can remind you what that is and tell you what the changes are. So, it'd be good if I actually shared the screen. Add that to stream. There we go. Okay, Payroll Protection Program. So what is it? So these are loans up to $10 million, and you get a maximum of $100,000 per employee. They're for small businesses with 500 or fewer employees. The interest rates are no higher than 4%. The loan term, this is a change. Remember, things in red have been updated. The loan term previously was 2 years. It's now been extended to 5 years. Now, these are backed by the SBA, but there's no separate SBA review, which is in theory nice, makes it a little bit easier. How much do you get? So the payout, the amount that you will get is 2.5 times your average monthly payroll expense. We're going to talk about self-employed in a second. 2.5 times your average monthly payroll expense. However, you will not get more than $100,000 per employee annualized. Okay, so so it works out to be about $15,800 that per employee that you will get maximum. That's maximum. Obviously, you're going to get the average monthly amount you actually paid, but that's the cap. Now, if you're self-employed, you don't have any employees, the way you're going to calculate how much you get is you're going to take Schedule C of 2019's tax return, line 31 on Schedule C. You're going to take that amount, which is basically your net profits from your self-employment income or self-employment activities. You're going to divide that number by 12, and then you're going to multiply it by 2.5. And that's the amount that should get dispersed to you. Now, what can you use the funds for? It's pretty limited, so I want you to pay close attention here. You can use the funds for salary expenses, including commissions, contractor expenses, health insurance. Actually, take off contractor expenses. That shouldn't be on there, so I apologize. That is incorrect. Not contractor expenses. Health insurance premiums, you can use it for. You can also use it for your office lease, your rent, or your mortgage interest, not principal, and utility payments, as long as those things were in force before February 15th, 2020. So you can't use it to go get a new office or new rent. Now, the thing I want to point out, and we are going to talk about self-employed folks here and what that looks like, but the thing I do want to point out is if you are self-employed, there is potentially a tax benefit so you're going to get these funds, right? And there is, by the way, another limit, which we're going to talk about in a second, but you're going to get all these funds. There is actually a benefit to using these funds to pay yourself versus using them to pay some of these other expenses like we talked about, because the way that would work is if you use the money to pay yourself, assuming you can justify it, which we'll talk about, then all those other things that you have to pay for, you can take tax deductions for, because you're not using PPP funds for. So just to make that super clear, anything you use the PPP funds for, you can't take a tax deduction for because it's free money. They're giving you free money, okay? So you can't then take a tax deduction for. So use the PPP to pay yourself. Use your other business cash to pay for your other expenses like your rent, like your payroll, and you can potentially get a tax deduction for that. Now, the big question, can I use it to pay myself? So you can, but you cannot benefit from both unemployment and the payroll protection program here for yourself. So you can take out the PPP and use the funds to pay your employees, totally fine if you're getting unemployment, but you cannot pay yourself with your PPP funds and then also go get unemployment, just to be clear. Now, again, if you're not normally on payroll, as a self-employed person, as a business owner, your salary is that line 31 of Schedule C from last year's tax return. That's your annualized salary, and then you'll break it down to whatever the monthly would be. The payout, again, 2.5 times your average monthly compensation, maximum of $100,000 per person. Let's talk about loan forgiveness, because this is a big piece of the PPP. So the PPP is forgiven completely tax-free if you use at least 60% of the loan proceeds to cover payroll costs, just payroll costs, okay? And most mortgage rent, and plus those like few other costs you can use it for a period of 24 weeks. I'm going to go over every single detail, so don't worry. So at least 60% of the funds you receive are used for these allowed costs over a period of 24 weeks. Now, if you took out the loan before June 5th, you can still use the 8-week period. I'm going to explain what that means in a hot second. So a couple of things have changed here. First of all, it used to be that you had to use at least 75% of the loan proceeds to cover these allowable costs. Now it's 60%. It also used to be that you had to cover these costs over an 8-week period. Now you have a 24-week period, okay? So you have a significantly longer period now. Again, if you took out the loan before June 5th, you can still use that 8-week period. We'll talk about in a second why you might want to. They've also extended the date to replace full-time equivalent employees, FTEs. So before, what they said was essentially to have the loan forgiven, you needed to restore the number of full-time equivalent employees that you had pre-COVID. You need to restore that number post-COVID by June 30th, 2020. So if you had 3 full-time employees before, you needed to make sure you had 3 full-time employees in place by June 30th, 2020. They're now giving you until December 31st, 2020. And this is important because a lot of businesses are not allowed to be open yet. And so getting them in place by June 30th is just not an option. Okay. Now, there is partial forgiveness if under 60%. This didn't technically change, but it got clarified. It's always been the case, but it was kind of confusing before. So if you only use 40% of your loan funds for allowable costs, you will still get some forgiveness. You just won't get 100% forgiveness. All right, let's talk about what this looks like if you're self-employed, because I know this is the big question for most people. If you're self-employed, your loan is completely forgiven if you do one of these options. The first option is that you take your 2019 net profit and you essentially take 850 seconds of it. So basically you take your 2019 net profit, divide it by 52 weeks in a year, multiply it by 8. So essentially you're calculating 8 weeks of your 2019 net profit and up to $15,385, because remember that's that $100,000 cap annualized. So up to $15,385. And as long as you pay yourself that for the 8 weeks of the covered period, then your loan is 100% forgiven. Or if you take 2.5 months of your 2019 net profit, so you start with that 2019 net profits, line 31, Schedule C, you divide by 12, multiply by 2.5, so the portion of your 2019 net profit that represents 2.5 months, and you pay up to $20,833, and you pay yourself that amount, over a 24-week period, then you will have your loan completely forgiven, okay? Now, let's talk about the application real quick. So there are 2 applications that they've now put out. The first is the full loan application. It's pretty long. I'm not going to go through it. The second is the easy version. Hopefully you qualify for the easy version. I would do everything you possibly can to qualify for the easy version. The easy version is for folks who are self-employed with no employees. So many of you watching probably. And then there's also some safe harbor rules that can bump you into the easy version. One of those is if you did not reduce your salaries and wages by more than 25%, and you did not reduce the number of hours of employees. So that's one of the safe harbor options to get you to do the easy version. The second is you experience reductions in your business activity as a result of the state or whatever saying because of health concerns related to COVID, you cannot open, you can only be open some of the time, you can only be open outside or whatever it may be. So you had those reductions in business activity because of those requirements, and you did not reduce the salaries or wages of your employees by more than 25%. If either of those things are true, or if you're self-employed with no employees, you can use the easy version. Now, to be clear, these are not applications for the loan to get the money. These are applications to apply for the forgiveness, because what's going to happen if you have not already applied for the PPP is you're going to go to a bank that is an allowed bank by the SBA. You're going to apply for the PPP. You're going to get your loan. You're going to go spend it on your allowable things. And then you're going to need to fill out an application to get that forgiveness. So it doesn't happen automatically. You have to submit this application. Make sense? Now, let's talk about how you apply for the actual loan. I just said it very quickly, but you're going to go to an SBA-backed lender. You can find a whole list on their website. You have to apply by June 30th. That is when the program ends. So if you have not yet, go ahead and apply. If you applied before and backed out because you said, I don't know if this is the right thing for me or whatever, you can apply again, but you've got to do it by June 30th. And you can go to home.treasury.gov/cares to find all of that information. Now, let's talk about what documentation you need. Very briefly, you're going to need all of your documentation related to your wages, your commissions, basically your payroll. Okay, you're going to need your payroll documentation if you've got employees. You're also going to need your income or net earnings documentation. So that 2019 Schedule C, line 31, you're going to need that. There we go, Schedule C from your 2019 tax return. If you have not filed your 2019 tax return, I would highly recommend you get it in ASAP. It's due July 15th anyway. Get it in. You're going to need it for this process. And then 2019 payroll tax filings as well. So I'm going to wrap it up there. Let me pull that off so I can bring me back. I've got some questions as well. So I want to make sure I address these. So my daughter got an EIDL advance to her bank for $10K. She's a gig worker. She sent it back not knowing about she did not know about keeping the $1,000 grant, and she sent the $10K advance back on the same day. Should she reapply for another EIDL loan? That's a great question. So I have a couple of questions to completely understand the situation. So if she got $10,000, that tells me that she must have 10 employees or 9 employees plus herself. Otherwise, I'm surprised that they sent her $10,000. So that's my first question, is basically wanting to make sure that the entire 10 grand she got was actually the emergency cash advance. Because if it's just her and her business, I'm surprised that they sent her the whole 10 grand. To answer the question of should she reapply for another EIDL loan? So here's the thing. I think she should. But what I would encourage her to do is write below me, disaster customer service at sba.gov. I would encourage her to email them first, because I would hate to see her go through the whole application process again. If there's something they can do, if they can clarify and basically say, nope, you're already in the process. Because my next question for her would be, okay, so she got this money, she sent it back. Did they ever send her an email that basically said something along the lines of, and actually, well, I don't have my email, but I was going to pull it up and see what it says, but something along the lines of, hey, we're the SBA, we've moved your loan application along in the process, and you're ready to approve your loan. Because if she hasn't gotten that, then I'd be curious if they still have her in the hopper for that or not. And so that's why I want to see her email them and ask that question before she applies again. Now, let me pull up as well, just in case you weren't here before, to write it down. You can also have her call 1-800-659-2955. That's the SBA's hotline as well. So she can email or call. But here's the other thing I would say too is, let's say she does either or both of those things and doesn't hear back. Then I would go ahead and reapply. I don't think there's harm in doing that. I will tell you, so when I was trying to figure all of this out for all of you so that I could help you and teach all of you months ago, back in March, I applied for the EIDL first and I didn't hear anything, like not even a confirmation that said, thank you for applying. So I thought, okay, well, maybe I didn't press submit, or maybe I screwed something up. So I sat on it for about a week or two. I emailed them. I never heard back. They're getting better now, by the way, but they were completely inundated then. But I never heard back. And so finally I thought, I'm just going to go ahead and apply again. And so I did apply again. And I don't know I think they probably just merged the applications. It never created an issue for me. So I would say first reach out to them, see if she's still in the process and if it can kind of get corrected in the process. And if not, if she doesn't hear from them or it can't, then go ahead and apply again. And I think there was another question. So, okay, I applied for an EIDL loan in April and got a confirmation number. Congratulations. That's more than a lot of people are getting. So that's good. I have not heard from the SBA since. Should I call or email or e-apply again? Yeah. So here's the thing. Unfortunately, that's not unusual. So like I said, I applied in March and I don't think I heard, in fact, I'll pull it up here just out of curiosity, but I don't think I heard until May. I got the emergency cash advance in my bank account maybe a month and a half after I applied, with no documentation, no email, nothing. The only reason I knew what it was is because in the memo line it said like SBA, something like that, and I figured it out, but no idea. And then it was probably a month later before I got anything on the loan. So it's not unusual. Should you call or email? Absolutely. Like there's no harm in doing that. But I also wouldn't be worried if you haven't heard anything, because unfortunately, that's just kind of the process. Now, I don't know if you heard me at the beginning say this. I did mention that I got the advance just put in my bank account like a month before I got the loan. That's how they were doing it in the past. My understanding, and for anyone watching, if you've gone through this, let me know if your experience has been different. But my understanding is that now they are waiting and they're kind of doing them together. So they're waiting until it's your turn in the EIDL application process to have your application like actually processed and get to the signing of it. And they're dispersing you have to accept your loan terms before they'll disperse your cash advance money. So that's my understanding now about how they're doing it. And so if you haven't received any cash advance, that's probably why. So, but yeah, I would email them or call them. Absolutely. So, all right. I don't see any other questions, so I'm going to leave it there. I hope this was helpful for everyone. If you're watching the replay, you've got questions, drop them in. I will try to get back to you as quickly as I can, and I will continue to monitor this. So if there are more updates, we can do this again next week. If people have questions, if people are stuck on things, I think especially where folks might get stuck is if you have the PPP and you're trying to figure out exactly, if you're self-employed, exactly what you should be paying yourself. And all of that. If you've got questions on that, let me know. I'm happy to go over that. But otherwise, I hope everyone is having a good Juneteenth. I hope everyone is going to have a great weekend, and I'll see you all next week. Bye.